A lot of people are saying that Tesla's only going up on hype and that there's no fundamentals backing it up. So here are some tweets from Carl Funkenstein. He's saying $800 or $1,500 a share is absurd. At some point, the fundamentals on Tesla will matter. He's saying that there are none. Uh, Ataraxia Investments says fundamentals don't matter for this analysis, only narrative, just like Tesla. But what I find with people who are making these claims is they haven't even looked into the numbers. And I'm going to show you some numbers that I think you'll be interested to see whether this is hype or fundamentals. We also see Calvin. He says that you don't want to bet against millions of retail investors who believe Musk is the Messiah and don't care about fundamentals. So people really don't understand this name. They don't understand what happens when Tesla gets a factory running, whether it's in China or in the U.S. Even Guy Adami had this confession here.
To start by saying it's pretty clear that since October, my lack of understanding in this stock is it's palpable. I mean, it's ridiculous. I mean, this stock has gone basically from 320 to the current levels in a straight line. So I just want to.
So you would think if you're talking about Tesla daily on business TV to the whole United States, that you would try to understand something you don't understand. But yet he persists. So let's just look at demand here for Tesla. What we see here is in 2018, Tesla Model 3 sold about 140,000. In 2019, despite the lower tax incentives, Tesla sold more than this in 2019. And they're really dominating this small, mid-size luxury space for cars. And this is more than a 2x over the Mercedes C-Class. What people don't know is that the mid-size luxury car market in China is twice as big as the U.S. This is going to come in later. So we see they're doing 140,000 plus in the U.S. So it's twice as big, actually more than twice as big. And if it only outsells 2-1 in China, it could do 300,000. This is just a hypothetical. But let's just pretend that Tesla only does half as well in China. Let's be super conservative here. Then it would do about 150,000. Tesla has something go for it. They have lower prices than the BMW and the Mercedes C-Class. There's savings on the license tax of $13,000 and also exempt from 10% purchase tax. This is from the EV Stock Channel, and these thumbnails were from carsalesbase.com. So it has a lot going for it. I expect at a minimum that Tesla would do at least half as good in China. So what does a factory in China do? What does one building in China do? Well, if you're paying attention, it does 150,000 units annually. So once it's fully ramped up, and they're not totally there yet, but they should be sometime this year, they'll do 150,000 cars, Model 3, in one building, one assembly line in China. So that's how many they make. Let's see how much they charge for them. So they dropped the price in January, and it's around 46,400. And let's just consider that very conservatively that they only sell it for $40,000 in China. Being super conservative. Just a hypothetical here. And we want to know, okay, how much profit does Tesla make on those cars? Their gross margin in their automotive business is about 20%. So Tesla does have high overhead. They're not a profitable business now. They're looking to finish the year, if Wall Street is correct, losing about $800 million. Um, but as they add capacity, as they add more assembly lines, provided that they sell what they make, they're going to have 20% gross margin or more. And just think, this factory in China, it's in China, and they set up for much less than the Model 3 in the US. So gross margins should be higher, but let's just be conservative. Um, Further, if you're looking at demand, let's look at Tesla just in the US. So this is Washington State, Seattle. New Model 3s are sold out. We got Oregon sold out. You can just check this on the Tesla website. Northern California sold out. Southern California sold out. Northern California is Tesla's home base, and they're completely sold out there. That's the first place where they sell cars. Arizona sold out. Texas, I don't think Teslas are available there. Miami and Southern Florida sold out. Northern Florida and the Panhandle sold out. Georgia, South Carolina, Atlanta, North Carolina, Charlotte sold out. Let's see. Richmond, Virginia, Washington, D.C., Baltimore, Philly, totally sold out. The reason why I'm going through this is the people who are betting against the stock are saying there's a demand problem. New York City, a little bit northern New York or central New York, Boston, Connecticut sold out. Indianapolis, Chicago, Cincinnati, Louisville sold out. Kansas City, St. Louis sold out. Minneapolis sold out. Denver, Colorado, other parts of Denver sold out. So there's not a demand problem for Tesla. And I looked last week. There was one Model S that was new that was available in the U.S. It happened to be in Minneapolis, and there were 10 Model X. And there's some more in Europe, but they're not getting cars. They may get some cars in about 15 days. So those cars that are available won't last long. And compared to how many cars they just sold in Europe, these amounts are really low. So what I want to do is show you these unit economics from one assembly line, one building in China. So you have 150,000 units times $40,000 average selling price, actually starting selling price, conservatively. That comes out to $6 billion in revenue, times 20% gross margin equals out to $1.2 billion in gross profit. Now, they don't need to add people to the R&D team to get this profit from the factory. They don't need to add more people in their headquarters in the U.S. to get this gross profit. Yeah, they are increasing some expenses, but it's not going to amount to a whole lot. Tesla's also building the Model Y building in the USA. So if you take 1.2 billion gross profit, multiply by 2 buildings, versus last year, they're going to add 2.4 billion in gross profit. Just looking at this hypothetical. Wall Street is forecasting 2019 that Tesla is going to lose 0.8 billion. So all else equal, not assuming full self-driving, not assuming this tax asset that Tesla has, not assuming anything else, not assuming growth in the energy business. You look at what they did last year and just add that 2.4 billion, and you come up with 1.6 billion positive. So, over the course of the year, you're hypothetically looking at positive GAAP earnings. Even if they add some more costs in China to get this gross profit, it's still looking fairly positive. And then we were just looking at one building in China. There are two more buildings coming in China. Likely they will start building the next one in 2020 and then the third one in 2021. Germany, I think people are a little too optimistic. We'll see when that happens, but they'll probably get to building one a year there. And then there's two or more coming in the U.S. There'll be a building for Cybertruck. There'll be a building for Semi and Roadster. We'll see how they build that. So just looking at 7 buildings coming beyond these first two that we just talked about, multiplying that 7 by 1.2 billion, that means that Tesla over the next few years, just in the automotive business, not counting on anything pie in the sky, not counting on full self-driving revenues. So altogether, the 1.6 billion they're looking to add this year, plus this 8.4, they're adding 10 billion from here on out, given these assumptions we made. So if Tesla's able to execute on all that capacity increase, and just think the China factory, they build it in a year. Tesla's ready to start selling the Model Y, possibly as early as February. So they're executing now. Tesla's definitely a prove it stock, and they are proving it. That's why you're seeing a big run up in the stock, in my opinion. So they're executing. I think you can conservatively assign a 20 times multiplier to that. So let's say they have 10 billion in net profits in several years. Can you apply a 20 times multiplier to that? That gets you 20 billion, and that gets you $1,120 per share. So again, this is not including feature complete, full self-driving, increases in energy, or the $1.8 billion tax asset that they can claim whenever they feel comfortable saying that they'll be profitable from here on out. So, what we're looking at is possible S&P 500 inclusion. So they need the last quarter to be positive, whenever that is, and they need the last 4 quarters to have been positive. And then they're in. So what do you think happens to the stock when they get included in the S&P? So what I see a lot of people are doing is they're looking at this investment in the rearview mirror. They're looking at what they've done, but Tesla is adding capacity. Yes, their overhead is too high right now, but it would be if they didn't add anything from here, and they're adding stuff. So again, let me just take it through the numbers real quick. 150,000 Model 3s. That's a conservative capacity of that line. Times 40,000 starting selling price of the Model 3 in China. Again, that's conservative. That equals $6 billion in revenue. If we assume that they produce that same gross margin as they do in Silicon Valley, probably one of the most expensive places to have a factory, and in China, it's the profit margin is going to be much higher, most people think. But if we just assume 20%, that gets you to 1.2 billion in gross profit for one building. So the unit economics are on Tesla's side. This is all public information. This is all factual. Tesla's automotive gross margins 20% or so. The only assumption that we're making here is that Tesla will do half as well in China as they do in the U.S. So if they only sell 150,000, they'll sell all their capacity there. Anyhow, I hope this has been helpful. There are some fundamentals behind the Tesla story. In December, the run up was from European competitors giving up and starting out in Europe rather than the US and getting terrible ratings. In January, it's been this China story. And the further move today might possibly be because Model Y is coming sooner than people expect. Anyhow, I'm Bradford Ferguson. It's been good talking with you.